Okay, let's talk about what might just be the single worst real estate deal in all of history. Or was it? It's a story about a deal that, when you look back on it now, just seems completely insane.
So on one side, you've got Manhattan. I mean, the financial engine of the entire planet, right? An economy bigger than most countries. And on the other side, you have this. A tiny, quiet little island in Indonesia with maybe a couple thousand people living on it. Basically a forgotten paradise.
So here's the kicker. Back in 1667, the Dutch, who were a global superpower at the time, willingly traded away Manhattan for that little speck of land. How on earth could that have happened? How could a decision that seems so obviously wrong today have made any sense back then? Well, to get it, you got to throw out your modern map and start thinking like it's the 1600s.
It really all boils down to two things. First, the power of geography. And second, the incredible, unbelievable value of one little, unassuming spice.
So, take a look at this map. See those tiny dots? For Europeans back in the 1600s, that little archipelago was basically the center of the universe. Forget about oil fields of Silicon Valley. The world's most valuable commodity grew right there, and only there. And that one island, Run, was the final crucial piece of the puzzle.
And what that creates is something economists call a natural monopoly. Think about it. When the whole world wants something, but the entire supply comes from one tiny place, whoever controls that place holds all the cards. I mean, they can basically charge whatever they want.
So, just how valuable was this stuff? Okay, let's get into the economics of it, because this is where that seemingly crazy decision starts to make a whole lot of sense.
You have to understand, in the 1600s, nutmeg wasn't just for, sprinkling on your eggnog. People thought it could cure the plague. It was a massive status symbol. Get this, in London, a single kilogram of nutmeg was worth more than 7 oxen. This wasn't just a spice, it was like gold dust. It was the 17th century equivalent of having a supercar parked in your driveway. And the profit margins. Oh my gosh, a single successful voyage from Europe to these islands and back could make you a return of 3,200%. No, that is not a typo. 3,200%. These are the kinds of numbers that people build empires for and go to war for.
All of this frenzy gave birth to a corporate monster, the Dutch East India Company, or the VOC. And listen, this was not your average company. This thing was basically a country unto itself. It could wage war, print its own money, establish colonies, all of it in the name of getting total, ruthless control over the spice trade.
And this chart right here really drives home the thinking back in 1667. On one side, you've got New Amsterdam, what we now call Manhattan. Back then, it was a swampy little outpost with a pretty decent fur trade, sure, but its value was, modest. On the other hand, you have Run Island, the key to unlocking a global monopoly on nutmeg. Its potential value? Millions a year. So if you're a Dutch accountant in 1667, which asset do you choose? It was a no-brainer.
Okay, so this insane competition for nutmeg, especially for that one little island of Run, eventually pushed the two big rivals, the Dutch and the English, into an all-out war. And the peace treaty that ended that war would redraw the map of the world in some pretty wild ways.
So after years of just brutal fighting, both sides were pretty much worn out. The real tipping point, though, came in 1667. The Dutch fleet did the unthinkable. They sailed right up the River Thames into the heart of England and just torched the English Navy while it was parked. It was an absolutely catastrophic humiliation for England, and it forced them to the negotiating table, fast.
The treaty was built around this really simple but powerful legal idea called ut Possidetis. It's a fancy Latin phrase that basically means what you have, you get to keep. So they picked a date, took a snapshot of the world, and said, all right, whatever you guys control on this specific day is now officially yours. End of story.
And this is where the big trade happens. The English had recently captured New Amsterdam, so under the rule, they got to keep it. It became New York. And what did the Dutch get in return? Well, they got the one thing they wanted more than anything else, Rhode Island. They finally had their complete nutmeg monopoly. And as a pretty sweet bonus, they also got the sugar colony of Suriname, which was hugely valuable in its own right.
So if you're looking at this in 1667, the Dutch look like geniuses. They won the chess match, they secured a priceless monopoly. But what if the future they were so sure about, the one they bet everything on, turned out to be completely wrong?
Well, that monopoly they fought so hard for, turns out it was incredibly fragile. It didn't take long for spies and smugglers from rival nations to sneak nutmeg seedlings out of the islands.
And pretty soon, nutmeg trees were growing in other colonies around the world. The market got flooded, the price totally crashed, and just like that, Ruin Island's golden ticket was worthless. Meanwhile, back at that swampy outpost the Dutch gave away, well, it became New York City. They literally traded an asset with unimaginable future potential for an asset whose value was about to fall off a cliff. That little trading post became the financial and cultural capital of the world. So let's circle back. Was it one of the dumbest decisions in history? It's so easy for us to look back with 20/20 hindsight and say, of course, but the real lesson here is a little more complicated and honestly, a lot more relevant to us right now.
Because here's the thing, it wasn't a blunder based on the information they had. It was a completely rational, logical decision based on the economic data of 1667. They chose a guaranteed, massively profitable asset over some remote colonial outpost with a very uncertain future.
The whole story is really a masterclass in strategy, isn't it? It teaches you that even the most rational decisions are, in the end, prisoners of their time. It's a huge warning sign about focusing too much on what's valuable right now, and maybe ignoring what could be valuable way down the road. And yeah, it proves that even the most powerful monopolies are never as secure as they seem.
And you know what? You can see echoes of this whole nutmeg craze all over the place today. The way that scarcity, speculation, and pure hype can drive the price of something to insane levels, from tech stocks to crypto, that basic pattern of human behavior hasn't changed one bit.
Which brings us to the final big question this whole story leaves us with. What's our nutmeg today? What's the one asset, the one technology, the one idea that we are absolutely convinced is the future? And what's the Manhattan that we might be overlooking, hiding in plain sight while we chase it?